Welcome back to this episode 12 of the Veterinary Business Video Show. This show made possible with the support of Lease UK Limited. In today's show we'll hear some views about valuing a veterinary practice from the United States and from the UK. We'll take a closer look at the services offered by Lease UK Limited and from a website devoted to helping practice managers with their people problems. I'll show you a nifty business tool to help you review the attitude of your staff members to their role and your practice, and I'll let you have my quick business tip for this episode. I'm John Sheridan, and this is the show that helps practice owners, managers and clinicians just like you to build your successful practice into a great business. For almost 20 years, since 1985, when I switched the emphasis of my career from clinician to management consultant, I spent a good deal of my time valuing veterinary practices on behalf of incoming or outgoing partners, practice owners planning to retire, vets and others wishing to purchase a veterinary business, and on behalf of a corporate group seeking to acquire successful established practices. Over that period, the method by which veterinary practices were valued changed from a simple rule of thumb multiple of turnover through a variety of weird and wonderful calculations to business valuations based on a review of financial trends and an appropriate multiple of net earnings. Here's a clip featuring Gary Glassman, a CPA in the United States, who explains why veterinarians today need to seek a professional practice valuation for retirement or for partnership buy-ins 6 to 10 years before they plan to sell.
Practice valuations are pretty important for practice owners in knowing the value of their practice. In today's environment, practices can have a wide variety of value to them. And much of that value isn't controlled like it was in the old days. Many practitioners used to look at their financial statements and look at the gross income that was generated and believe that their practices were basically based on 1 year's gross revenue, and that's what they could be sold for. The market today for the sale of veterinary practices is much more sophisticated, and the valuation process tends to center around a study of the financial results of a practice and the fact that you need to look at more than 1 year of those financial results to get an understanding and to help compute the value. The value of that practice today, based on some accepted valuation methodologies, are based upon the net of the practice and not the gross. So it isn't the sales that are going to help determine the value. It's going to be the net or the cash flow that helps determine the value. And practitioners should be looking at knowing what their practice value is probably somewhere between 6 and 10 years out before they might be considering some type of a partial sale to an associate or the sale of their practice in its entirety. And the reason why you really want to kind of do that is to know where you might sit in the marketplace. If in fact you don't like your value or you don't find your value to be acceptable, you have an opportunity from that point on then to do things within the hospital to change the cash flow nature, since we know it's a net basis that's determining the value and not the gross. And through a process of both looking at the costs and the income that's generated out of the practice, you have an opportunity to change that and put it more in the type of light that may improve the value of the practice. So at the point in time that you're ready to make an offer to either the associate or you're looking to sell out the practice, that at that point in time you'll be much more happy and satisfied with the value then.
Here in the UK, there are a number of consultants with considerable experience of valuing veterinary practices and who understand the supply and demand situation in the current market. One of them, Steve Bedell of animusforvets.com, says that a goodwill valuation may be necessary when you're planning to sell or purchase a practice, for partnership changes, or when a practice structure changes from a sole trader or partnership to a corporate status, and for example for insurance purposes or as part of a divorce settlement. Whatever the reason, Steve Bedell recommends that whenever possible you should arrange an initial independent professional valuation at least 5 years ahead of the planned event, and that you should seek the advice of a